Today we are covering one of the most commonly asked questions, which is how do you read charts? And this will apply to people of all trading skill levels. I truly think it will help everyone. We're not only going to go over some of the most profitable patterns to trade, but also how to spot these patterns without having to memorize anything. Although this is not a complex skill, I do believe it is one of the more important ones to have when you are trading. Looking for these common patterns and levels of support and resistance can be referred to as trading on price action. There are no indicators required as we are simply trading based on what the price is telling us. We're going to refer to this kind of perspective of looking at it by learning the story of what the chart is telling us rather than identifying each pattern or candle or shape by name. It'll be easier to explain with a simple example, so let's take a look. This is one of the most common reversal signs in charting, and it's referred to as the bullish engulfing candle. What we have here in normal terms is a red candle, the stock is going down, then we have a green candle, the stock is going up, and the green candle fully engulfs the previous red candle. This can signal a reversal, but why? Let's take a look with just general logic. There are people selling, 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 we close here. Then wait a second, we have buyers. They buy up the shares being sold for these prices in the red candle, but continue to buy the prices even higher. Here, the bulls are winning. There are more buyers than sellers. The demand has overtaken the supply at these prices, and people now must pay more because, well, everyone that wanted to sell here, they've sold out, and the buyers don't mind paying more now. Looking at it from this perspective, it might be easier to understand why these two candles side by side can signal that reversal in a trend. It's a very, very, very basic example of a general principle of supply and demand. A quick note, everything in this video is true for the reverse as well. So here we have a bearish engulfing candle where the red candle covers up the green candle entirely. And then as you can see, we continue to trend down. Now, obviously that's just the most simple example, but it gets you in the right mindset of thinking about what the chart is trying to tell you. In your free time, try to take a look at some candles and try to see what that price is telling you just from the chart and put it in like the stupidest terms ever, like, oh, buyers, sellers. Supply, demand, try to make it as simple as possible. So we're just starting to kind of think about this a little bit differently. Let's try to expand this into more complex patterns and longer time frames. Here we have SPY. This was a real trade alert put out today. There's a clear level of resistance here at this top line, and the price hits it repeatedly before going back down. Notice though, this is the important part, as it comes down, each candle returns to a higher low than before. In other words, this is lower than this, which is lower than this, which is lower than this. Here is the pattern simplified. Obviously, it's not going to look completely perfect every single time, but as you can see, there's a 73% chance that we will be successful in this trade if it meets this criteria. So why is this pattern so successful? First of all, what do we know? We know the price is struggling to get past a certain level of resistance. We know that after being denied from that resistance, the price goes back down, but each time it goes down less and less. Think about this from a strictly logical perspective. What does it tell us when the price is squeezing closer and closer to a number while hitting higher lows? Well, the buyers are taking over. They can't get it down here anymore, right? But they're still buying. All the sellers at this level got bought out, and boom, we have a nice continuation for the rest of the day. I also picked this one on purpose because if we zoom in, look at this, we have an outlier. It's outside of our triangle. It's breaking the trend. Uh-oh, whatever shall we do? But would you looky there, it's our old friend, the bullish engulfing candle, which covers all of the losses and pushes the price back over the original point of resistance. So we went down for 15 minutes straight here. It didn't matter. This 5-minute candle overtook all of those losses, took us back over this resistance level, and essentially this is just giving us two buy signals at this point. Everything is screaming buy. We have this, it broke out, it tried to come back down, we got an even stronger signal here. So obviously we bought it here, the trend kept on going, it turned into a really decent day trade. We can look at another just to have another example. This is a very common pattern signaling a buy. Here is the simplified version, and this is called a double bottom. Pause the video and see if you can explain without using any stock terms why this is a bullish pattern. So we have sell, sell, selling, selling, stops. Okay, buy, 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 stops. Sell, 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 oop. Stops again at the same price. No one wants to sell lower than this price. Interesting. Buy, 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 buy. Do we buy here? No, we have to wait till it gets past this previous high. Taking this back out to a real world example, we see here, goes down, hits a bottom, goes up, hits a top, an interim high, goes back down, hits the same bottom again, Here it breaks out, not quite, because it didn't close above it. It has to close above it for the pattern to be complete. We come down just a little bit more, it finally closes above it, and would you look at that, our trend continues throughout the day. Notice that we're not buying it just because it hit this low down here twice. Rather, you have to wait for the price to pass this interim high for the pattern to be complete. Think about why that is and try to explain it to yourself or explain it in the comments. These are just a couple examples, and I'm not going to go through all of the patterns and explain why they are successful ways to trade. What I'm trying to do is change the way that people think so that they understand why these are successful. Once you look at them enough, it becomes intuitive. You look at something and just in your brain says, ooh, that looks good. And then when you look back later, you're like, oh, it's because it was a double bottom, or oh, it's an ascending triangle. The human brain is incredibly good at pattern recognition, so I can just scroll through charts like this and my brain will just tell me, hey, good, hey, no, bad. It takes some practice, but once you stop trying to memorize those patterns and actually look at the very clear information that the market is giving us, you can take that and use it to your advantage and be much better at predicting the future moves in the market. In the description of this video, there is a link to all the trade alerts, news, and education. The alerts are completely free to try and severely underpriced at just $9. That is less than like a Big Mac meal, and it's healthier for your brain. So yeah, read through that link if you're interested. If you enjoyed the video, drop a like. We're trying to break yesterday's record of 2. They were both me. And subscribe to the channel for part 2 and more videos like this. I will be making a part 2 based on the comments on this video. If there are no questions that y'all have, then I guess I explained it very well and we won't need a part 2. If you have questions, ask them, I'll answer them. That's all I got for today. See y'all tomorrow.